Okay. Well, good evening, everyone, and welcome to George Mason's PhenomeNIL Patriots education seminar on name, image, and likeness and income taxes. Thank you all for taking some time out of your evening schedule to join us. We are very lucky to have Jeff Smith and Kevin Hamaker from BSB CPAs and Business Advisors, who are two of our phenomenal partners in our work here in the athletic department to promote and maximize NIL opportunities for our student athletes. So these two experienced gentlemen are going to give us some basic education on the implications of your involvement as student athletes in NIL activities, and some best practices for income taxes and things that could be helpful for you. So without further ado, Jeff and Kevin, I will turn it over to you. The floor is yours. And thank you so much again for taking some time out of your evening to do this for us.
You're welcome. Thanks, Malcolm. So as you're all aware, the NCAA has decided to allow athletes to start receiving some funds for the use of their name, image, likeness, or I guess you could say they were forced to do it by outside parties. So it's been a long time coming. It's certainly appropriate. Unfortunately, it comes with some complications because now if you're making money, if you're receiving value, the IRS has an interest in you. And businesses are working with you, and that's causing activity that needs to be reported. To do anywhere in any way, shape, or form, some in-depth presentation would take at least a couple hours, and I don't think any of you guys want to hear me lecture for that period of time, and I'm not really interested in doing it either. So we're going to keep this kind of basic and high level, but just try and touch on some of the areas that you may experience. So with that said, I did put together a little bit of a package of tools and forms that I sent over to Malcolm. Maybe some of you have gotten it. If you haven't, that's okay. You don't need it for this presentation. But it will be available to you if you'd like. There it is. And I'm not going to go over everything in this. I just put together some things that some forms, like I said, and some other tools that might be of use down the road, and things that you might want to be aware of, such as if as part of that, one of the first things is the new business overview, which is a section in there, and it goes down and a list like 10 different things that you need to do to start up a business, because the reality is that's what's happening. You're becoming a business when you do your name, image, and likeness out there, as far as the IRS is concerned, anyway, and a lot of other reporting organizations. But you probably don't need to go through everything on there, coming up with the name, getting an employee ID number, worrying about a location and all of that's probably not that relevant unless these activities become more substantial in nature. And in today's age and time, you just never know. I mean, that little cute little video you do for somebody all of a sudden goes viral, and all of a sudden people are calling you left and right and wanting you to endorse this or talk about that. And so it's good to have an idea of what you need. But to keep this kind of zeroed in and basic, there's the one first and foremost issue that you're going to come up with is what type of employment, what kind of relationship with the organization that's paying you, are you an employee in essence, or are you an independent contractor? Are you the business yourself? If you're an independent contractor, you are the business, and you have your own reporting responsibilities and requirements. If you're an employee, much simpler. You get a W-2, They withhold half the payroll taxes, Social Security and Medicare is the payroll taxes. They pay half of the payroll taxes on your behalf, and they are supposed to withhold income taxes. Easiest thing for you is to be an employee and get a W-2. The one wrinkle there is if you're an employee, one of the forms that's in that package is called a W-4. That's where you tell the employer how much you want to have withheld in income taxes. If you're not going to be making that much money, you have you're allowed to write exempt on there, and then they won't withhold any income taxes at all. And so the good thing about that is if you wouldn't be required to file a tax return and pay income taxes, then you don't need to file anything at all because nothing was withheld and you're below the threshold for filing. And we'll talk about some of those thresholds in a minute, but you could write exempt on there, because if you don't write exempt on there and they withhold taxes, the only way to get that money back is to file a return and prove to the IRS that you didn't have any income that needed to be taxed. So you just, if you scroll down on that, just at the bottom, toward the bottom of the return, you just write in exempt. On like 4C or anywhere on there, you just write exempt. And then they are allowed to not withhold taxes. They are required to withhold income taxes at some level, and without this form, they can kind of make up the level, so you don't want that. So that's the easiest, simplest way of working and getting these items. However, it's not the way most of these deals are probably going to work. Most of them are going to consider you a independent contractor, meaning you're not an employee of theirs. You're somebody that they've contracted with to work as an independent party. And that's when things get a little bit more complex. If you are an independent contractor, you should get a 1099 form at the end of the year. This is the form that the business gives to you to show, and to the IRS, to demonstrate how much value they've paid you. And the key thing is it also goes to the IRS. And the IRS has, one of the things they do have that does work for them very well is they have a system of matching up these 1099s to individual tax returns. So if you get a 1099, they're going to be looking at it. They're going to be looking for it on a tax return that has your Social Security number on it, or at least the Social Security number that's on that 1099. It'll either be a 1099 NEC, non-employee compensation. That's the one it should be, but sometimes people use the 1099 miscellaneous and just put it in other income. Either one means you have income to report. Now, they don't need to give you this unless they pay you over $600 a year. Not in one check through the entire 12 months calendar year. If they pay you more than $600, they're supposed to issue this 1099 to you. And if they issue this 1099, then the IRS is going to be looking for a tax return with this information on it. And the reason they're going to be going with independent contractor for you as that status is because it's the easiest and cheapest way for them to operate. They don't have to pay, they don't have to worry about benefits, they don't have to worry about withholding taxes, they don't have to pay half of your self-employment tax, because if you are an independent contractor, you have to pay all of the self-employment tax, which is 15.3% of your net income. And we'll go over that in a moment also, what net income means. It's not just how much they gave you, it's what you realized after expenses. So the important thing to remember here is that probably is the way you're going to go. But that's the question, first question you ask if somebody comes up with one of these deals is, okay, how are you going to treat me? Am I going to be an employee or am I going to be an independent contractor? Question number one. After you get past how much they're going to give you, I'm sure that's question number one. Sorry. Question number one is how much are you going to make? Question number two is how are they going to report that to you? Is it going to be as an employee or as an independent contractor. If it's an independent contractor, as I said, the employee one's kind of simple. We don't really have to worry about that. Your reporting requirements, if you get a W-2, I'll go into those real brief, depends on, and this is where it gets complicated, and I can't give you all the answers because it depends on what else is going on in your life. This arrangement that you have for your NIL is only part of your entire package as far as the IRS is concerned. I mean, you might have scholarships, you might have investment income, you might have another job. There's a lot of different things that you could also be doing besides this business, and it doesn't stand on its own. It's combined with anything else. So if you make over $1,100, just $1,100, and you're a dependent of someone else, your parents, you're on their return as a dependent, you will probably need to file a return. If you're not a dependent, then the threshold can be much higher. It can be $12,000. If you're just single, you have you're not a dependent of somebody else. Unless, of course, you're self-employed and you file as an independent contractor and you have to pay self-employment tax. Self-employment tax is the Social Security and Medicare tax that the employer pays half of and you pay half of as an employee. As a business person on your own, you have to pay that. And that unfortunately has to be paid on net income over $400. So just like that, I gave you a couple different figures. $1,100, if you're a dependent and you have income of $1,100, you may need to file. If you're not a dependent, you could go up to $12,000 potentially. However, if you have to file as self-employed and pay self-employment tax, that's a Schedule SC, that's in the package that Malcolm threw up there, then you may have to file even if it's only $400 or over $400. So that's where it gets a little tricky because there's multiple levels of reasons why you may have to file a return. So that's that's the big one. What kind of employee or what kind of arrangement do I have? Am I an employee, a W-2, and I'm independent contractor, 1099? Now I want to get briefly into the type of compensation, which is probably more interesting. What kind of compensation am I going to get? If you're going to get cash, and when I say cash, they're going to send you a check, they're going to give you payroll or whatever, not slip you cash under the door while nobody's looking. Although if they do that, technically that's reportable too. The IRS says that you're on your honor to report this stuff. But of course there's levels of amount that they care about. So cash is pretty simple. You got paid, there's a dollar amount, that's what you use to report. Where it can get a little tricky, of course, if it's not cash. Now here you can get gear, clothes, shoes, whatever. They could give you food. If you're doing something for a restaurant, you can come in and eat lunch every day free. I give you 2 comments on that. Eat as much as you can. Invite as many people with you as you can to get the biggest benefit. As far as reporting it on your taxes, my guess is you would never get a 1099 for that. And I doubt you really have to worry too much about anything unless you bring in the whole family every week, and then they might send you a 1099. I don't know. But you got free meals, stuff like that. You may not be too worried about, but gear, clothing of any type, if they're giving you product of theirs, they have energy bars or drinks or whatever, the employer, the person that's giving you those, they kind of have the responsibility of telling you how much they gave you and what it was worth. If they're not telling you that, and you're concerned about how much this is adding up and whether or not you have a responsibility to report, then it's essentially whatever you would have had to pay for it. Whatever you would have had to pay for that item, that service, whatever it is, say, I do your tax preparation because, you made a lot of money and you needed somebody to help you. I should value that. I should tell you how much it is. You should report that as income. The IRS considers all of these things income, reportable income. If you got value, if you received something of value that you would normally have had to use money to purchase, then the IRS would consider that reportable income. Another item to go by, Malcolm was nice enough to give me a list of some of the deals. Somebody is getting a lease of a car, which is great. The first question there should be, what kind of car? No, probably not. Maybe not what kind of car. You should just be thankful they're going to give you a car, but is it a Corvette? Maybe that's another question. But again, this is a lease. You're getting value. This one's actually fairly easy because the IRS actually has a table in the IRS code to determine what the value of a leased vehicle is. And it's basically, it's based on the original cost of the car usually and how old it is. There's a couple columns, but, and I know you probably couldn't guess this, but they call it the annual lease value table. They're very creative at the IRS. It's the best they could come up with, but it is, that's what it is. So, again, in that case, and I talked to that person, and it's going to be a 1099. They're going to give you a 1099. They're going to give you a 1099 for how much of the value, how much you would have had to pay in essence, or how much the IRS assumes you would have to pay, because they got to, as I said, they got their own table for that. And that's going to be put on a 1099. And that's the information that's going to the IRS. The IRS, anytime you get a 1099, they get a copy of that. They get a copy of that. Their system will try and match up the dollar on that to a dollar on your tax return, or a tax return with your Social Security number on. So that's income. Again, and if I did services, if somebody agrees to do your dry cleaning, for free, what would you have to pay for dry cleaning? That's what you're supposed to report. Even if they don't give you a 1099, you're still supposed to report it. We have in the United States what's called, I know you may think it's not really voluntary, but they call it a voluntary system. We have, as citizens and taxpayers of the United States, it's our responsibility to report honestly to the IRS. Now, they do have some systems in the background that they can use to kind of verify some of the things that we're reporting to them, which you need to be aware of and conscious that you match up. But there, we have a voluntary tax situation, and we're supposed to report what we have. So even if they don't give it to you, you're still supposed to report it. Now, when you are an independent contractor, that 1099 amount, say on this annual lease value for the vehicle, it's $10,000, just to use a figure, and so I can keep my math simple. You're supposed to report $10,000 of revenue on a Schedule C. Again, part of the package. It's a profit and loss form for the business. Your revenue minus your expenses, net income. Net income is what's used to compute your self-employment tax. You can put expenses against that income. You can reduce that income by anything that you had to spend out of pocket to assist you to make that. Such as, you're going to events. They want you to go to events, and kind of hang out and shake hands, whatever. You can't charge anything for your time. Because if you did, we'd all be $1,000 an hour people and taking big deductions, and the IRS wouldn't like that. So they won't let you take a deduction for your time. But if you drove there and you incurred mileage on your vehicle, you could take a deduction for that and reduce that gross income by that. If you hired somebody to hold the camera while you were videoing something, well, nobody does that anymore because we got all this nice technology, but say, you help somebody helped you, you paid somebody to help you put together something, you could deduct that. You could also make a retirement plan contribution based on this income and reduce your overall income. So you can do a lot of things on, related to that. And the Schedule C form that's in that package has a whole bunch of different line items listed on it that could help you identify areas that you might have expenses that you could offset. So if you can get that number down below $400, now you're kind of below the threshold that the IRS cares about. There's no SE tax in that scenario, which is a big deal, because even if, because then then you're back to these other thresholds of $1,100 or $12,000 of income. So you want to try and get that income down as low as you can, so you don't have to pay the self-employment tax. Because we all know Social Security is going to be bankrupt by the time that any of us are allowed to retire, except for me, because I'm going to start collecting it next year. And so I need you guys all to work really hard, pay in your Social Security number so I can get my benefit. But it's good system. That is where the money goes. So technically it's going to your benefit long term. And they do keep track of all of that. But it's you don't want to pay it now. Now is not when you want to pay self-employment tax. You want to maximize all of your dollars in your pocket. So that's what you want to do there. Now the filing requirements for income tax refilings, and as I said, it's very difficult to give a straight answer to that. I'm not trying to be difficult. It's just there's too many considerations, because if it's not just this deal on its own, whatever it may be. That's just a part of whatever else is going on in your life, such as, maybe you have another job. It's like, a job that you work on the side to help pay for your college education. That would factor in. Do you have any investment income? Maybe, some of you might have a trust account, or some money that your grandparents gave you that's sitting in an account somewhere and generating some income. That could affect how and when you have to report this other activity. And whether or not, as I said earlier, whether or not you could be claimed as a dependent on somebody else's return comes into play as to whether or not your requirements are there. So with all of that, and another complication, I'll say, then there's the state too. It's not just the IRS, it's the state. Virginia, I'm assuming, everybody's here right now in Virginia. You may not be a Virginia resident, though. You may be from North Carolina or overseas or some other place. But if you're making the money here in Virginia, guess what? Virginia wants you to report it in Virginia, and they want to tax it. If in fact you do have to pay tax in Virginia, generally most states will give you a credit for whatever you had to pay for Virginia, so you don't get double taxed. But that's a complication. And chances are you don't want to fill out those forms on your own, but you could give it a shot. I got the 1040 in that package. I got the Virginia resident return 760 in the package. I also got a 763, which is the Virginia non-resident form. So I guess all of that is to say, things get complicated very fast. And the best thing you can do is to try and figure this out up front before it gets too complicated and the dollars get too big down the road, because then chances are you're paying somebody, you're going through things to fix issues instead of addressing them before the issues occurred. So what I would say is, for whatever all of these activities, whatever they may be, you should set up some sort of system internally for yourself to keep track of everything that's happening. Can't count on the businesses to report things properly. Sometimes they make mistakes. You could get a 1099 that says, you made $10,000 and you only made $8,000. They made a mistake. That 1099 is going to the IRS. IRS is going to expect to see 10,000. You only got 8,000. So you can do two things. You can go back to your employer and say, this 1099 is wrong. I need you to fix it. I need you to file it with the IRS. Or we have workarounds internal. We can report that $10,000, subtract that $10,000, and then report the actual $8,000 that you made. So those are things that we can do, but you need to keep track of this information during the year so that you don't get hit with these things that may be inappropriate and that may cause you trouble down the road. So it doesn't have to be really complex, but just a simple little schedule. Now, there's plenty of programs out there, money. I mean, you can go online and you find all sorts of software to help you out to keep track of this stuff. Doesn't have to be really sophisticated, just basically a checking account, money in, money out. If you keep track of that and you keep track of it more or less as you go during the year, you'll have a pretty good list of information that can be very useful. I'm an accountant, went to Mason, got my accounting degree. It's been very good for me. I'm not going to say you need to be an accountant, but it's very helpful for you to develop some skills on how to keep track of your dollars coming in and going out, as I said, because that's how all of this information is used. That's how it's reported. And I will say that there's a lot of jobs out there for accountants right now. So I'm going to give you a little plug right now. If you want to have a job when you graduate from college and you want to make a decent living, maybe not what professional athletes make, or at least not the top tier ones. Okay, it's not even close to that, but it's pretty decent. And you can get a job easily coming out of school. But you don't need to be an accountant for this activity. You do need to be aware and be able to track what's coming in and what's going out. It's 7 o'clock already. So what I will say is, Kevin's on the line with me here. I wanted to be here for a couple reasons. One, he's one of our newest partners in the firm, not the newest, actually. We have other ones, but he's one of the newest. And coincidentally, he was a college athlete. So you might be able to relate with him a little bit better. And he's a little bit younger, so maybe that will help too. But regardless, everybody here at BSB, and we have a lot of GMU grads here. Any of us would be more than happy to help and listen to any issues that anybody has at Mason, any of the athletes do. My contact info is on the presentation. Kevin's is on there. I guess the biggest thing I'd like you to get from this is it's not as simple as you may think, and we'll be happy to help. And if it gets to be, really sophisticated thing, we can sit down and figure it out. But, just simple questions, we have answers, we can help you out, and we'd be happy to. So that's really all I got. Well, I got a lot more actually, but we don't want to go. We don't want to go into all the fine details. For anybody that came on a little bit later and wants to go over some individual questions, problems, or just concerns that they may have, curiosity, feel free to reach out and be happy to talk to you. So I was going to say that Malcolm could have the chat up and we could take questions as we go, but I don't think I didn't really want to take up a lot of time. But if anybody does have any questions and wants to talk right now, you can send a chat to Malcolm and I can address them now, or again, feel free to reach out to us at any point in time after. What do you say, Malcolm? Did I hit all the high points or anything else?
You hit all the high points. Kevin, I will certainly give you a minute or two. The floor is yours if you have anything you'd like to add or just say hello. And then after that, we don't have to use the chat function. Anyone's welcome to take their Zoom off of mute, ask a question if you have one. But Kevin, you first.
Yeah. Well, thank you. Just giving me the opportunity to be here in front of everyone. One thing I wanted to sort of add to what Jeff said, I think could be useful, is there is some tax planning go into this. Don't receive all the money, spend it all, and not have something set aside for the tax. Because like Jeff said several times, the IRS is going to want their money. Personally, I would say conservative, very, very conservative advice I give to a lot of my friends, family that are self-employed is assume that a third is going to come out for taxes. That's probably way too conservative, but at least that way, if you're preparing for it, you'll get some cash at the end of the actual tax season.
Good point.
Yeah. And just to give you a little background on my story, I've been at BSB for about 10 years now. I came from Catawba College. I played football there for 5 years. So after that, I went to Clemson for grad school and then made my way up here.
Thank you, Kevin. Any questions from anyone? With the view I have right now, I can't see everybody. So please, you're welcome to turn your Zoom off of mute and ask away.
So I can understand that, you know, sometimes you don't have the questions as we're going through here. What my experience is, most people remember them or think of those questions pretty much right after they log off. They go, oh, I wish I'd asked this. So that's when you can reach out. Send me an email, give me a call, whatever. It's fine. I'm happy, you know, we're all happy here. I'll have, you know, we have other people that can help out too. So give us your questions, give us your concerns. As these deals become more prevalent, they'll probably develop some more complexity. But anyway, even if they don't, they're all going to be a little bit unique in some way, shape, or form. How do you value what you're getting? Your own individual specific situation as to whether or not you have to report and file anything. And then of course, you know, how much tax that you actually have to pay. And as Kevin stated, the one thing that has caught in my experience over the years in public accounting and doing taxes is self-employment tax catches so many people by surprise. They just never anticipated that they would have to pay self-employment. They said, but I didn't make any money. You know, at the end of the day, I don't have a tax liability because I'm below the filing threshold. Not if you have self-employment tax. That is not income tax. You may be below the threshold for income tax, but there's a different threshold for self-employment tax. And, you know, there's ways that we can minimize it, certainly. But that's the one thing that catches more people off guard, more self-employed people off guard than any other issue.
Yeah, and just to sort of piggyback on what Jeff said, the example of the car is the lease is almost the perfect example of getting caught in a situation. So let's say the lease was actually $12,000 worth of value. Well, they didn't necessarily give you the tax or the cash to pay the taxes. And the $12,000 income, self-employment, next thing you know, you thought you got a free car basically. And now you're having to pay $2,000 to $3,000 in self-employment taxes. So that's what you have to be cautious of.
So yeah, that's a good one because I mean, like I said earlier on, if you get cash, things are, you know, reasonably straightforward. You got some money, put it in the bank, as Kevin said earlier, you save some of it, you know, maybe up to a third of it, put it aside so you have money to pay your taxes. When they're giving you something other than cash, that's still taxable, still reportable, still could generate a tax liability. And so you'd be out of pocket cash later on when you have to file and they never gave you any cash. Could be a major issue. Now, you know, hopefully, likely not a lot of money, but, you know, as time goes on, we hope the money is going to go up or hope there's more value here for you people that, you know, that you can generate some real return here. And as that happens, the potential liability for taxes and certainly the complexity can go up dramatically. And we don't want anybody to be caught unawares that they're going to have a tax liability. That's the worst thing. I tell my clients all the time. One thing that we try here to avoid more than anything else is surprises. You know, I can't always get rid of your taxes. Try and reduce them as much as we can, but we can't always get rid of it. But one thing we should be able to do if we're working together is minimize the surprises. Nobody likes surprises when we're talking about money. So that's the biggie. And the best way to do that is to be informed up front. You know, get advice or keep your information, do your own research. I mean, you know, that's fine. But be aware that you're talking about a business relationship here, and you're talking about essentially you being a business and having all of the responsibilities of the business. I mean, I didn't even go into, if you file a Schedule C, you potentially have a Fairfax County business license. You potentially have Fairfax County personal property tax. These are additional filings. Now, you know, again, if the levels are low enough, then the liabilities are probably, if not zero, relatively minor. But if you file an income tax return with the Schedule C on it, and you have a Virginia address on there, Fairfax County or whatever other jurisdiction you're in, Arlington, if you're there, but we'll just say Fairfax for most of them, they're eventually going to pick up on that. And they're going to send you a little letter that says, hey, it looks like you got a business in Virginia. Now, the problem is it could be 2-3 years down the road before they catch up. That's how long it takes for these things to cycle through, because they get information from the IRS. And so there's all sorts, everybody has their hand in your pocket. Trust me. That's what it's all about. Everybody wants their share. Everybody wants their piece. And the important thing is to make sure that you consider all of those things, you know, certainly minimize their effect as much as possible, maximize your return. But the real key is to make sure that you have all of them addressed up front, because minimizing them after the fact isn't as easy as minimizing them as you go. I mean, you have a little bit more latitude, a little more flexibility if you address these things as you go, instead of waiting for one of these taxing authorities to catch up with you. If you wait for that, your flexibility has diminished dramatically. So there's no quiz yet. We won't have a quiz, but you know, that handout just has a lot of info on it. Things that, you know, if you see them, or hopefully just to remind you when you're talking to somebody about one of these relationships, you know, am I going to get a 1099? Am I going to get a W-2? Do you have any idea how much I could be making down the road so that I can estimate my taxes? Is it going to be, you know, is it an all non-cash deal, or am I going to get some cash? If I'm just going to get product of some sort or services of some sort, you may want to go back and say, you know, I need a little cash because there's going to be a tax obligation here. I mean, that now we're getting into negotiations here. If somebody, you know, says the cars, as Kevin said, is a perfect example. Here's the car, a lease of this kind of vehicle for a year, 5, 6, you know, whatever thousands of dollars. That's going to cause you a tax liability. Can maybe they switch the deal around a little bit to have, you know, $1,000 cash to help you cover your taxes? Of course, now you got an extra $1,000 of cash that you're going to have to report as taxable income, but that's a lot better than not getting anything. So the non-cash deals, the product deals, the service deals do add a little bit of a additional complexity. The value that should be reported is the fair market value, whatever you would have had to pay, generally speaking. But really, for the most part, the business that you're working with should provide you with that. But if they don't provide you with that, that's a big question. That should be a question up front. Are you going to be giving me this information? So, educated ahead of time reduces the issues later.
Jeff, Kevin, thank you very much. To everyone that was able to join tonight, thank you very much as well. One last chance to all of our student athletes that are on. Any questions at all before we wrap up for the evening? Okay, hearing none. Again, Jeff, Kevin, again, thank you very much. Very informative, very educational. I have the packet. If anybody wants it, any coaches or student athletes want to shoot me an email, happy to share it and distribute it again. We'll make the recording available on some format, hopefully maybe on our PhenomeNIL Patriots website platform for other student athletes or teammates who weren't able to be on tonight. But thank you very much, everyone. I appreciate you being on. Thanks again to our phenomenal partners at BSB. Have a great evening, everyone.
It was great. See you guys.
Thank you.
Good one, everyone.